We are live. Good morning, everybody. Welcome to another edition of Benzinga's All Access, our weekly show where we put aside the stock market, put aside the charts and the daily movements and the candles and the valuations, and we take a step back and we actually talk to companies about them, about companies, right? We get behind the stock and into the story. This is our show where we do, as I said, once a week, every single Friday, and we talk to these CEOs, we talk to these CFOs, we talk to the C-suite executives about the story of their company, and not just about the stock price, but about what are they working on? What are their headwinds? What are their tailwinds? You know, where have they been? Where are they now? Where are they going? These are all questions that I have, and we will do our best to ask them all today. So I've got 5 companies joining me on today's show. It's going to be a big one. I think some of them people in our chat maybe waiting for a certain company. That'll be a little bit later. We've got 5 companies on today's show. Very exciting slate. Producer Aaron, can we please roll that intro? By the way, silly me because I miscounted. There are 6 companies on today's show. That was a that was an oops. Anyway, welcome to All Access. Before we bring on our first guest today, our first speakers, there's actually 2 of them coming up right now. A couple of housekeeping items to address. Housekeeping item number 1. All right, All Access is a paid show. This show is one of the ways that Benzinga monetizes its entire YouTube video operation. Okay, and their disclaimer is as such in YouTube. All right, what that means is the companies that are appearing on today's show, they did pay Benzinga to be here. However, and this is the key part, however, they don't know what I'm going to ask them. They might have like some idea, but they really don't know. And you want to know how I know that they don't know? Because I don't know what I'm going to ask them. I have my notes in front of me, but it's not like I have questions written out. That's not how I roll. I have my notes. Whatever pops into my head, that's what I ask, right? And the best part is they don't know what you are going to ask them. Yes, you, the viewer, you, the listener. If you have questions, please put it in the chat. I would do my very best to allocate 5 minutes at the end of each of these 20-minute segments to doing questions from the chat. So please don't be shy and ask away whatever you've got on your mind, as long as it's appropriate. Obviously, I will do my best to ask. So that's the first housekeeping item. The second housekeeping item is this show actually has a sponsor of its own. That sponsor is Ticker, TIICKER. I believe we have a quick video for that. Let's roll that.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
So go to ticker.com, TIICKER.com/Benzinga. Once there, if you create your account, if you connect your account to your brokerage, if you do those things, after 30 days, Ticker will send you a $20 Amazon gift card. So y'all can see the schedule on the right-hand side. Here's the breakdown for today. I'm going to bring on our first guest here just in a moment, Cingulate. That'll be followed by Mamamancini's Holdings, followed by BioLargo, followed by Mullen Automotive, followed by SQL Technologies. And we're going to wrap the show up today with a conversation about the markets with Schaeffer's investment research. All right. I think I got through all of my opening spiel. I haven't yet groveled for likes. If you want to hit that thumbs up button, that really does help. The more likes we get, the more likely it is that YouTube will recommend this show to other people, and the more people will see it. And then we're all happy if that happens. So smash that like, do it with your finger, do it with your elbow, do it with your nose. I really don't care how you hit it, but just drops the like. All right. Without further ado, it is 10 o'clock on the nose. Let's bring on our first speakers of the day, because plural, because there's two of them. I'm going to bring on Shane Schaeffer, who is the chairman and the CEO, and Dr. Ann Childress, who is a consultant to Cingulate. And let's get them on the show right now. There's Shane and there's Dr. Childress. Both of you, welcome to Benzinga All Access. Excuse me.
Hey, Spencer, how you doing?
Doing fantastic, doing great. This is going to be funky because we don't normally do these one-on-two conversations. But Shane, I'm going to start with you, and then we'll get Dr. Childress involved. What is Cingulate, and what are you working on?
Yeah, thanks, Spencer. Cingulate, we are a publicly traded company. So the quick 2-second blurb, we will be using forward-looking statements. Check out our website, cingulate.com/investors for full SEC guidance. What does Cingulate do? We are a really unique biotech company in the space today. We have developed a proprietary drug delivery platform called Precision Timed Release. And what that allows us to do is take these multiple different therapeutic areas in the CNS and cardiovascular oncology, take your pick, where oral drugs are currently being delivered, and unfortunately, patients are not getting the best outcomes. And it's not only patients, it's payers, it's providers, it's families, it's the entire gamut of what happens in healthcare. So what we're focusing on is using this platform to develop new, innovative, next-generation therapeutic medications where patients' unmet needs are not being overcome. That's our focus. It's at the patient level, the payer level, and the provider level. We have 3 assets in our pipeline right now. Our lead 2 assets are both in the attention deficit hyperactivity disorder space. It's an area I know very well, but not near as well as my good friend, Dr. Ann Childress, who's is so kind enough to join us. Dr. Childress is one of the top ADHD experts in the world. So excited to have her on here today. And thank you, Ann, for being here with us. So our lead assets for ADHD are beginning their phase 3 trials. So CTX 1301, which is a dexmethylphenidate product. The trade name was Focalin, product I launched back in my Novartis days, is a product that's really designed to overcome all of the unmet medical needs in ADHD. And that is a product that works immediately, lasts appropriately, has better safety and tolerability, eliminates the booster dose, which, by the way, is the dose that gets abused and diverted 99% of the time. It's a product that has that elimination of the crash and rebound. We wanted to tackle the big issues that affect this $18 billion category where patients are not being properly served. So that's our lead asset. We have another product in ADHD, which will be starting trials next year. That's an amphetamine-based product because the market bifurcates about 50-50 between those 2 products, which again is designed to overcome those same issues, but with a different molecule. And we're really excited about the expansion of our PTR platform. We are now in clinical trials with a product called buspirone hydrochloride. So buspirone, trade name is Buspar. Here's a medication that is the #1 prescribed anxiolytic. So for generalized anxiety disorder, the #1 prescribed product, over $2 billion in generic sales, and it's almost a $6 billion market. This product needs to be taken 2 to 3 times a day. What does that mean? If you have anxiety, you want to take a drug 2 or 3 times a day, and this is a chronic medication. So our goal now is to bring that product into the pipeline and again, overcome unmet medical needs for the patients. So we're really excited to work in these 2 therapeutic areas. And then of course, we look to expand into other areas like major depressive disorder, bipolar/schizophrenia, some cardiovascular disorders, as well as some oral oncology products as well. That's us in a nutshell.
Yeah, great rundown. I want to move it over to Dr. Childress here. Explain your involvement and from your point of view, what the unmet need is here.
Sure. I'm a clinical researcher, but I'm also a clinician. So people that do clinical trials, I follow them afterwards. So I have some of my patients with ADHD I've been seeing for more than 20 years. And one of the problems that we have is we have a number of great medications. Nothing works better than the stimulants with ADHD. But one of the problems is they don't last all day. Even Vyvanse, which is a great medication, peters out after about 14 hours, right? And So, and it takes a while to kick in. It takes the best we could get out of it. The best I could squeeze out of it was an hour and a half to start working. So even Vyvanse, we often have to add a booster in the afternoon because, as I said, 14 hours is the best you can do with it. Not everybody does well on amphetamines. And what happens a lot of times is I have kids on methylphenidate, they're taking Concerta or they're taking Focalin XR, and I have to add a booster dose in the afternoon. And that means that somebody's going to have to either get medications to them at school, because you can't carry around a controlled substance. You'll get in trouble, right? Somebody takes your medication, somebody catches you with that, even if you've got a prescription, it's a big deal. So you either have to get to the nurse's office, but the nurses usually leave early in the day, and then maybe the kids have to stay for safe key. So they don't really have a way to stay covered in the afternoon. It would be great to have the Cingulate product on the market so that I can avoid those booster doses.
It's a silly question for you, Anne, but how long has ADHD actually been, a confirmed diagnosis?
Oh my gosh, several hundred years. If you go
Okay.
back in the literature, you will see references to things that sound like ADHD.
Okay.
Back in the 1800s. If
Okay.
you look early on in the 1900s, people were looking at minimal brain dysfunction. And we didn't start calling it well, it was before my time. They didn't start calling it ADHD in, till the second half of the century. And if you think about stimulants, Benzedrine was actually first looked at for something that looks like ADHD in the 1930s. These were boys that had bad behavior problems, and they were looking to see if they could use Benzedrine, which is it's basically an amphetamine, to help with headaches. Didn't help with the headaches, but their behavior got a lot better. And then Ritalin was actually first marketed by Novartis in the mid-1950s. But the problem with that is it's a 3 times a day medication. And with ADHD, you're forgetting your medication. You forget things. That's part of the disorder. So you got to take something 3 times a day. There's not a likelihood that you're going to be 100% compliant with that, right? And with the kids, they're going to have to go to the nurse's office at lunchtime, do things like that. And nobody wants to go to the nurse's office unless she's like super cute, right? So
nobody wants that.
It's a real problem.
I'm seeing some comments in the chat of people talking about their own experiences, on various medications, and yeah, I guess, I've never, been on them myself, but they're saying that these are highly addictive substances. So I guess my question, this really is to either of you or both of you, is why hasn't this kind of a drug that you're developing that has longer, that lasts longer, that does not have the addictive qualities, why has that not been developed?
Well, now we're not saying that CTX 1301 is not going to be addictive, right? It's a controlled substance. It's methylphenidate. All methylphenidates and amphetamines are controlled substances.
Okay.
But you're less likely to abuse something that's longer acting. The abuse potential for the drugs is really the highest with these immediate release medications.
And to answer the second part of your question, Spencer, and thanks, Anne, for that. In terms of why has no one else done this? It came down to a couple of big decisions. And the most important one is there a delivery technology out there that can not only give you the drug 3 times a day? We could accomplish that through like the old beaded technologies. Now that's pretty much it. So you could have accomplished it in those little contacts with all the beads that fall down. The problem is you don't want to just do something very pedestrian and say, okay, I'm going to give you a dose at time 0, boom, another dose at hour 4, and boom, another third dose at 8 to 10 hours. You need to be specific. The pharmacokinetic, pharmacodynamic, so what the blood levels are and what the efficacy and side effects are, that relationship with stimulants is so well understood and known, again, because it's been around so long and treated with stimulants for so long. We brought together at Cingulate the top experts in ADHD, including Dr. Childress, and said, guys, ladies, how do we build the best drug? How do we overcome this? And they all said, look, you don't want to give a third. You don't want to give it as a pulse. You want to make sure you're giving it the way the patient needs it. And that's why when we looked at all the different technologies that were out there, we realized none of them were going to work. And that's why no one else has done this. The PTR platform gives us that ability to deliver at time zero 35% of the medication as a pulse. That's intentional. Then we wait specifically 3 hours to deliver the second dose. This time we give 45% of the medication, but not as a pulse. We sustained it over a 90-minute time period. And then this is the most important part, by the way, is at hour number 7, right around 1 or 2 in the afternoon, depending when you took your dose. Most people take it around 7 a.m., so we're talking 1 or 2 p.m., right? Right then, we deliver another pulse, but this time we don't overwhelm the patient with a full dose of medication. We give 20% of your total daily dose. That does 3 really important things. It stops that wear-off effect, the crash, the rebound, all those negative symptoms associated with those blood levels falling. Number 2, quite frankly, most importantly, it extends the efficacy. That gives us that 16 hours, which then allows for a solid 8 to 10 hours of sleep. So the drug wears off at the right time, but you get that extended efficacy. And third, as Dr. Childress was saying, we also then avoid patients needing to take a booster dose. It avoids physicians from writing that booster dose, which has to be prior auth as well. And it avoids the payers from reimbursing it and the patients from paying for that booster dose. We give it in there we add that dose in there, we overcome all of these major issues in ADHD, and it's all due to the technology that Cingulate has developed, precision timed release.
I just want to address the chat that I do see a lot of questions, and I'm going to apologize in advance. If you had a question and I just assume I didn't see it and put it in there again, because I'm doing my best, but there are a lot of you in here, and I see questions, and I will ask a few of them once I get to a few of my own here. What about the fact that, we're talking about a controlled substance here, and the FDA is cracking down on that? So how does that impact the rollout of this drug?
So I think the FDA is always, the FDA and DEA in this situation, they're doing a great job of really trying to make sure patients are safe, and also make sure that providers and pharmacies are doing the right thing in terms of making sure these medications are getting to the right people. Yep. And not being abused or diverted. The beauty of what we have is you're going to take this medication once in the morning when your day starts, and you're done. The biggest issue with abuse and diversion, according to the DEA, 99% of the abuse and diversion is associated with the short-acting stimulants. Those are your booster doses. We eliminate that from society. They don't even, the manufacturers that make those, I'm sorry, we're gonna try to put you guys out of business on that product. We don't want physicians to have to write it. We don't want payers to have to reimburse it. And we don't want patients to have the chore of remembering to take it and paying for it as well. So we're really fitting in nicely, I think, in terms of where society and government and regulations are looking at to overcome that challenge. It's not needed anymore.
And then just to reiterate here, we're coming up on the start of the phase 3 efficacy trial, right? And that's why you're here in a way, right? Because you're sort of overseeing that.
I'm the lead investigator, yeah. And I just looked yesterday, Shane, I've got 11 people in the queue.
All right.
So
All right.
as soon as we're going to just run out
Holly
of the
will be
gate.
very happy to hear that, as will Dr. Brahms. Yeah, that's awesome.
I want to get to the chat a little bit. There is a question, actually, this is one that I usually have as well, and I know we're not there yet, but down the line, assuming we have some positive results from the phase 3 study, what is the go-to-market plan here? Are there any partnerships that you can announce or that are in the works, or is that part of the plan as well?
Yeah, absolutely. It's a great question. So from a commercialization perspective, the answer is yes. There's a lot happening behind the scenes here, and we look forward to the opportunity to be able to discuss that more once it becomes public, once it becomes public. Cingulate does not intend to commercialize this product independently. We're a small company. I'm not at Pfizer anymore, so to speak. My background is at Pfizer, Novartis, and Sanofi. So we know we need to find that right partnership. And what we're looking to do is really focus early on really 2 critical elements of our commercialization strategy. And that is, number 1 is market access. We need to make sure that patients have access to our products at an affordable price. We have that inherently built into our platform. It's another beautiful benefit. We're using compression technology, so we can pump out, when we're fully up to speed and operational or commercial speed, 1 million dosage units in a single day. That's our goal. So we can really bring those costs down. But at the same time, what we need to focus on is making sure that we contract effectively with the payers. Those PBMs, pharmacy benefit managers, cover 90+% of lives in America, and there's 3 big ones. So we're already communicating with them. We're bringing on a group that is, quite frankly, in my opinion, the best in the U.S. To help us and assist us in building that plan. We got a guy from Pfizer that recently joined us that is a market access expert. So we're really focused on market access. The story is simple: better efficacy, better safety and tolerability. We're providing lower numbers of prescriptions that doctors have to write, less abuse and diversion. And what's the main thing? Better outcomes for patients. That's what we want to bring to the market there. Secondly, the world has changed. It was changing before COVID, but according to McKinsey recently, 50% of physicians will no longer see a rep ever. They don't want to see them anymore.
Really?
The other 50% will see a rep once a year, maybe twice, and at most 3 times a year. So what does that mean? We don't need as many boots on the ground, but you still do. You still need to have effective sales professionals out there, and we're going to do that. But at the same time, what's that digital strategy? We call it omni-channel. How do we make sure that physicians are getting the education they need to understand on our products? So we have a really great opportunity there, and I look forward to talking about that more in the future. And that's going to be our strategy. We'll commercialize very strong.
Wait, just for context, like today or in the past, what is how many meetings are normal between a sales rep and a doctor?
I grew up in a world with Pfizer and Novartis where your reach and frequency was 12.
Once a month.
Yeah.
12 a year. So you would versus max 3 now, and that was for your mid-tier physicians in terms of deciling, in terms of prescribing behavior. When you looked at higher prescribers, you'd look at 18 to 24 times a year, once or twice a month, depending on that. The world has changed, and that's not a bad thing. Dr. Childress, you're a clinician. How many reps?
Well, I also am on faculty at 2 medical schools, and the faculty and the residents, they cannot have interactions with pharma companies, right? If a pharma used to have dinners all the time, right? That you got doctors to dinners, gave them a little wine, presented the product. No faculty or residents are able to go anymore. So they don't know about the products. Well, the ones I teach know about the products because I've worked with all of them. And so I give them my publications.
Yeah. We're really lucky to have Dr. Childress, by the way. I mean, she has studied every single product from stimulants to non-stimulants to even digital strategies in ADHD. She's truly one of the best. So we're lucky to have Ann working with us.
And Dr. Childress, you said at the top, you've been involved in every ADHD study for the last 2 decades.
Well, not every study, but every medication. Most have made it on the market, a few not so much, but then they didn't need to come out.
So in those past experiences, what are the signs of a successful medication or trial and versus not?
Well, you need a medication that works and that is tolerable. So effective and tolerable. That's what you need in medication. And we know that dexmethylphenidate is a very tolerable medication in general. I always felt that Focalin XR was a little kinder and gentler than other products, other amphetamines. The amphetamines, it's a methylphenidate. But one of the problems is you didn't really see it in the studies. You just kind of felt that as a clinician, right? If somebody was more sensitive, you're like, oh, this is going to be my go-to for them.
Interesting. And just to put a bow on Shane's prior point that you are confident in your go-to market ability and your ability to partner up with these other firms. It sounds kind of like you were. I'm just sort of reiterating that. We're on with Dr. Ann Childress. She's a consultant, and we're on with Shane Schaeffer, who's the CEO of Cingulate. And the ticker there is on the bottom of the screen there, CING. Either of you guys, any final thoughts for us or for the audience here about the as far as date? It could be dates or timelines or when we can expect an update.
Yeah, sure. So again, we've in our recent press releases that we've put out that we intend to get our phase 3 studies started in the second half of this year. We obviously hope to do that as soon as possible. We're manufacturing our final 2 dosage strengths right now for our fixed dose study, which Dr. Childress again is the principal investigator. We could see results, top line results from that study by the end of the year. Dr. Childress is also going to be running a really exciting trial around adults and the onset and duration of our product versus placebo. So that'll be an exciting trial that we'll focus on as well. That'll be also done this year. We're, as everyone is, and I liked your intro, Spencer. Let's not talk about the market. It's crazy, but we're really excited about the opportunity once the dust finally settles, and we all want it to happen as soon as possible. I think Cingulate's in a really unique position because, three key things. One, we're tremendously undervalued, in my humble opinion. Got to say that. When you look at this $18 billion market and Cingulate developing 2 third-generation, best-in-class medications that really have an opportunity to dominate this marketplace. So we have a tremendous opportunity there. Our story is an easy one to tell, frankly. I mean, everyone knows someone with ADHD. We're just solving the problems finally, and we do it through a delivery system. Nothing too confusing about that. So we have a huge opportunity there. And then I think, from a risk perspective, we de-risked this thing so much. Stimulants have been approved 100% of the time over the last 50 years at the FDA. 100%. Why? They're all methylphenidates or amphetamines. So the FDA knows them well. They're safe. They're effective, as Dr. Childress was saying. So from a risk perspective, we put ourselves, I think, in a good position with those 3 key points in terms of getting this thing moving as soon as this dust settles, which we look forward to.
Crazy stat about that. All right. Shane Schaeffer, as I mentioned, is the chairman and the CEO, and Dr. Ann Childress is the consultant and the lead investigator on their upcoming phase 3 study. And Shane, thank you both so much for joining us today on All Access, and have a good rest of your day.
Thank you, Spencer, and best wishes, my friend.
Bye.
All right. That's a bit different. I'm not used to doing the 1-on-2 conversation, so thank both of them for doing that for me. So there was a question in the chat about the agenda and the timing of all this. So my next guest who's here, I'm going to bring him on in a moment, is Carl Wolf. He's the chairman and CEO of Mamamancini's, and that'll go until around 10:40, give or take, maybe a few minutes after. After that, we'll talk to BioLargo from 10:40 to 11. 11 to 11:20 is going to be Mullen Automotive. 11:20 to 11:40 will be SKYX Technologies, and then we're going to wrap the show up at 11:40 with Schaeffer's Investments Research. So without further ado, let's bring on Carl Wolf. He is the chairman and the CEO of Mamamancini's, and there he is.
Good morning.
Mr. Wolf, how are we doing today?
I'm good.
All right, we are doing a bit of a pivot. We're going from talking about drug development and ADHD to consumer packaged goods and food. So I do have some assets, some slides I want to share at some point. But before we get to that, just briefly give us the overview of Mamamancini's.
Mamamancini's, excuse me, I'm just getting over a cold.
Okay.
Mamamancini's is a manufacturer and marketer of all natural food products sold into supermarkets and club stores. Our major product lines are Italian food products and also a recent acquisition of T&L Creative Salads and Olive Branch, are 2 related companies who make a whole line of salads featuring another product line in chicken and also savory olive products. So we have in our total line over 100 products, and we're in about 70% distribution across the country in various chains. The key to our business is to increase volume per SKU, stock keeping unit, per chain, and also add more items. So
Can you explain? Can you explain that metric a little bit, the volume per SKU a little more? Because that's one of the reasons I like doing the show, frankly, and talking to people like you, is there's all these industry-specific metrics that are not known outside of that specific niche. So can you just explain that a little bit more and what that means and how you affect us?
It isn't just food. In retail, a stock keeping unit is one item that is sold as a merchandise product. So we sell meatballs, that is a stock keeping unit. but we sell meatballs in a 3-pound club store pack. We sell it in a 2.5-pound family pack. We sell it in a 1-pound retail pack. We now sell it in meatballs in a cup. Each of those are separate stock keeping units. They have their own ID. The same thing is in clothing, in home goods, etc. It's a unit that goes up on a spot on a retailer's shelf or in the catalog.
So if I go to the store and I buy a quantity of one, whether it's one jar of one or one jar of 4, if I'm buying one, that's one stock keeping.
One unit, one code.
Right. Got it. That makes sense.
So the key to the business is not only the number of chains you sell, but the number of items you sell to a chain. We sell an average of about 4 items per chain. Also, it's who you sell. So as an example, Walmart goal is to sell around $30, $35 a week per store. And Costco's goal is to sell over $600 a week per store. So it isn't just a number of retail outlets, it's who you're selling. So obviously we can sell more to Costco or Sam's or BJ's. Those are all club store chains, which have much higher volume per store. That is a much better auger of volume. So we're now in about 45,000 plus locations in supermarkets. That means we're selling X number of supermarkets, X number of SKUs. So it's probably closer to 55 to 60,000. We haven't updated that in the last year because it's a misleading, in a sense, a misleading benchmark, because again, it's who you sell. So you could sell 3,000 Walmart stores, 5 items, and now you're in 15,000 places on shelves.
Yeah.
But your volume will probably be the same as selling Costco nationally on 1 item, okay, or actually a half item. So anyway, the point is that we have a very, very strong national presence, but we have a long way to go. As you can see on the chart, we have Kroger to go, the rest of Walmart, even though it's low volume per store, it's a lot of stores. Costco is a tremendous opportunity for us. We sell about half of Albertsons Safeways now, and that's rolling out to the whole chain. Albertsons Safeway is the number 2 chain in the country in terms of total volume. Publix is our best customer in the country. They have 1,200 locations, and we sell Publix about 12 different items. So that's a very, very positive customer for us. We just started selling Aldi, which is a national chain of lower pricing. And Aldi has around 2,200 stores. And each store volume in Aldi is very, very positive. Each SKU item in Aldi is very positive.
So I was going to ask you that whether or not you're content with your current distribution, and it sounds like you mostly are, but that's still an expanding thing for you.
Oh, we are. I mean, we're really, we're really gunning for more business. We just started selling BJ a number of new items. We sell BJ 5 items now. We're going to 6, but we have 10 items that are being considered, new items being considered. So if we can wind up going from 5 to 16, and we sell in the same velocity, we have a chance of tripling our business.
Yep. I'm wondering if you could just speak a little bit about what your supply chains have been like and are looking like out into the future. Just because everyone's kind of messed up, or maybe have recovered, but were messed up in the last couple of years. And how did that affect your business at all?
Okay, well, we've done pretty well with supply chain. We've found, especially in the last several months, have found alternative suppliers. Some of the backlog waiting time has gone down. That has not been the issue for us overall. We've dealt with it. We're still doing, I'd say, 99% fulfillment of orders on time. The biggest issue we have right now is the high cost of protein. which is been
Mhm.
defying gravity and
Yes.
way beyond any sort of prior numbers. What happens? I originally was going to be an economics professor at one point. So even though I'm very micro, people say I'm too micro, but I'm also very macro, and I watch, over time trends and commodity prices. Even when people say never, it's never, never, and they do come back to a norm. They may come back to a higher
Yeah.
and when prices come down, it does allow us to increase our margins. So we're squeezed on the way up, and we increase our margins on the way down. So over the long run, we really had a scramble this past fall through January. Things are stabilizing, and our margins are starting to increase. And our long-term margins are about 8% pre-tax, and our volume is very dramatically increasing. We're moving year before last, we did 40 million in sales. Last year we did 47. I just saw a report from Taglish, analyst report just came out this morning. They're projecting 90 million in sales. I think they're probably a little low. So our business is very, very robust. So if we can make our 7 to 8% on 35, we have 36 million shares outstanding. Let's say 40 million shares, we're going to be able to earn 20 cents a share pre-tax on a normalized basis. That's our goal.
You just spoke to a very interesting economic phenomenon where prices go up. If input costs go up, prices go up, and then if input costs go back down, prices don't necessarily go back. For some things they do go back down, but for
they don't go down as much. You go down some, but you don't
Right.
go down the full amount. So it's a opportunity to increase the market. It's
Right.
timeless. So,
Right. So okay, talk about where your growth is going to come from outside of the more distribution and the SKUs. Are there more products in the pipeline here,
Yeah.
or do you have like an acquisition plan? I mean,
we have four major areas of growth. Two are new product lines. One is meatballs in a cup, which is a 7-ounce serving of meatballs, six cocktail-sized meatballs, and sauce. It's microwavable. It can be served on a hot bar, a grab and go in a convenience store chain. It can be served to order, 2 minutes to microwave it in a convenience store chain or a sub chain or whatever. It can be sold cold and then refrigerated, and then at home microwaved or microwaved in the store. That has unbelievable opportunities for the company. We had to perfect the microwave technology. We've gone slow. We've sold it on QVC, which was easier because we sold it frozen, and that has sold out. We're now on our third presentation on QVC. We now have 3 orders starting for supermarket chains and a test in a convenience store. So ultimately, the volume in this item can surpass anything that we've come close to up to now. We really don't have large numbers in our projections because it's such a large opportunity. We're going very slow. If you roll it out too fast and you make mistakes, and then the product's killed. So we're tweaking it and perfecting it, but it looks very, very positive. The second item is what we call Meals for One. And we sell that item, which is sold frozen to the supermarket chain or club store chain. It's a meal ready to eat, an upscale version of Swanson, a very upscale version of Swanson. The chain defrosted at the store, and you have a gourmet meal to take home. Normally it costs around $7.99 to $8.99 a unit at retail. We started selling some in January. It's now moving out very, very positively. That is a huge opportunity. The supermarket chains don't have the labor or want to use the labor to put together these grab and go trays. And as you saw in the chart, one of the charts in our presentation deck, the grab and go to go home market's growing around 8 to 10% a year. The middle of the store is decreasing. This last year was with COVID, last 2 years with COVID, people bought more middle of the stores, but that will go back to the long range trend. People like the convenience. 70% of all consumers decide what they want for dinner after 12 noon. And many people have different dinners at the same time or different times. So that business is going to continue to grow, and we have a lot of interest and a lot of new customers on that item. The third area is club stores. We have not anywhere near penetrated the volume on it. Our volume are running very, very positive there. We use that as an example and then go get additional SKUs or get initial distributions. If you look at the Costco chart, we're only in about a fifth of Costco, and only in a rotation. Our volumes are way above their minimums, and so in the long run, it augurs extremely well. A successful item in Costco nationally all year round is about 25 million in sales. So our goal is to get three items in Costco all year round, which is a $75 million business. The last area of major growth is moving T&L's lines, which consist mainly of chicken, olives, grilled chicken, a whole variety of flavored grilled chickens such as barbecue, Italian, Mediterranean, regular, a whole line of savory olive products, dry grain salads, grilled products that we put on our grillers such as panini and grilled vegetables, and to move that into our distribution channel, Mamamancini's. Up to now, T&L has been mainly a local marketer and distributor and manufacturer in the Northeast. So now if we can expand their business into our other customer bases, as an example, we sell Whole Foods nationally. So we were to take our panini, and which is doing very, very well, and put it into all Whole Foods, would be a very, very dramatic business. But we're starting to get some major new business selling T&L products into our customer base. So if you add all that up, it's very, very robust opportunities for the company.
Maybe we could just speak for a second just about like the macro picture for the consumer packaged goods industry. What are there any sort of just industry-wide tailwinds working in your favor or headwinds? Well, the
headwinds, as you know, with the commodity pricing, and
right.
We're dealing with that.
Okay, so beef is expensive, right? But like aside
we're handling that and have that under control. The tailwinds are if we have a recession, people will want to eat out. They'll eat out less, and they will trade down to grab and go items more. So I think that we will have a very stable, positive business. So supermarket business will increase in general in a recession, and excuse me, there's a noise going there. And we think that the grab and go, the prepared meals will grow as fast as prior. So a recession really will not affect our business.
All right. That's interesting to know. All right, we're on with Carl Wolf, who is the chairman and the CEO of Mamamancini's Holdings. We've kind of run through the product line here and the distribution. Are there what other levers though are you able to pull? We talk at Benzinga all the time about levers and vulnerabilities, right? Are there other levers that you can pull here?
Yeah, well, as we've spent a lot of time on operating efficiencies.
Okay.
And one we've had a struggle putting in NetSuite, and We now are pretty much complete with it, but it slowed down reporting of some of our numbers. We had to re-go over them. But NetSuite is a very prolific EPR system, and it's really starting to show dividends where we can look at benefits to the company. The other thing is that we're able to look at best practices in purchasing. So as an example, as mentioned in our conference call, we were able to change packaging suppliers for Olive Branch, the company we just bought, and we think we'll save about $20,000 a month in cost. So we've gone down the line to look for best purchasing options for the company, and that is in a whole variety of areas, from cheese to packaging to now vegetables, etc. The other area of efficiency is that we've been able to increase our sales with minimal increases in plant overhead and regular overhead. So as our volume continues to increase, that should augur well for profitability. We made a recent change in the manufacture of Italian products. We have a new operations manager. He's been very, very positive in a matter of weeks in terms of efficiencies, labor, yield, quality. Normally, it's 1,000 points of light. If you go into a really great restaurant and you notice the light bulbs are out, it means very likely that the ketchup is going to be half full and dirty, and some of your food's not going to be. So it's normally when you run a top operation, it's everything. So we're making changes to increase the operations and quality, and we'll coming down to the bottom line. So overall, we're very, very positive about the future. We know we have the sales. Sales are booming. Yeah. We know eventually commodity prices, which we see already, are leveling off, and we've been able to get through major price increases. And now we're really concentrating on operating efficiencies. So we're very, very positive about the future of the company.
Carl Wolf, Chairman, CEO, Mamamancini's Holdings, ticker MMMB. Carl, a pleasure to chat with you again, and have a great rest of your day.
Thank you. Bye.
Alrighty. All right, let's keep this train moving here. Although I'm going to be honest, full disclosure here, that our next guests, the gang from BioLargo, have not showed up yet. Now, I do see that MULN has logged into our platform. I don't quite think they are ready yet. I see like they're here, but they're not like set up, if you know what I mean. I don't actually see anyone on camera on their end, but I do see that they're present. So I can confirm that MULN is here. They're in our virtual studio thing, but they're not actually, I don't think, ready for the camera yet. If they are ready, I'm just gonna bring David on, because our scheduled guest for the 1040 segment, BioLargo, don't know where they are right now. So sort of in wait and see mode right now. And in the meantime, guys, you keep saying bring him on. He's not sitting he's not in front of the camera. If I bring him on, it'll be just an empty seat. Okay? I don't think you want to see an empty seat. That's not fun for anyone. All right? Josh, yes, we will ask about the Fortune 500 order. That's actually near the top of my list, frankly, to get color on that. So I know there's been a lot of questions in the chat. You should, if you've put a question in the chat about MULN in the last hour, just assume I didn't see it. Okay? Assume I didn't see it. Put it there again. Okay? I'm doing my best. I've got 4 screens out in front of me right now, and I can't look at all of them at any given time. So you know, that's what I can do. And I just got a message actually from the MULN team. They're here, but they're going to be ready at the original time slot, which is 11 a.m. Eastern time, 8 a.m. Pacific. So we're going to stick with MULN in 15 minutes. Okay, so everyone, if you're here from Mullen, I guess leave and come back in 15 minutes, or stay. I mean, it's a free country. Do what you want. If you are new here, my name is Spencer Israel. I am the executive producer here at Benzinga for our shows and TV operations. So I'm still the executive producer, even though today is ironically my last day at this amazing company after 7 wonderful years. This is sort of my last hurrah, if you will. So I'm excited to talk to Mullen, go out with a bang. Last time we had Mullen on, it wasn't this show, it was a different show. I think we had him on Benzinga Live or one of our other shows, and we moved the stock. And I don't necessarily love when that happens. I'm not out here to move stocks up or down. That is not my goal. That's not my job. I know that we got a lot of Mullen bulls and some bears in the chat, and that's fine. That's what makes a market. But my job is to just ask questions, and if the stock moves, so be it. It should go without saying, although I'm gonna repeat it, that neither myself nor anybody here at Benzinga, at least to my knowledge, has any positions in any of the companies being discussed on today's show. But as I said off the top, and it bears repeating, the show is a sponsored show. All the companies that are on today's show, they did pay Benzinga to be here, but I think, as you've seen, the interviews are pretty free-flowing, and they definitely don't know what I'm going to ask them. Although Mullen, frankly, they should expect the Fortune 500 question, because all y'all are asking me about that. So I'm going to assume that they expect it, but I hope they have an answer, because that's what we're going to do. Pickle Jim, I did not move AMD yesterday, please. Although that would have been, if I had the power to move AMD, man, I'd have a lot more money. All right, so we have 14 minutes. This is fitting. This is actually fitting that on my last day here, I have 15 minutes to myself, really. So, okay, you know what? This is what I'm going to try to do. I'm going to try to write questions down as I see them. Did you buy? Oh, I thought that said, did I buy Mullen like the stock? I thought that said, did I buy a Mullen like the car? And I was like, of course not. Okay. Okay, man, guys are moving quick here. Let me write all this down, okay? Because I have to write this down, otherwise I will definitely forget. All right, and if BioLargo shows up, we are going to talk to them. But wow, you guys are quick. And if I can have some help from any of my producer colleagues, that would be very helpful. Oh my gosh, stop moving so quick. You guys are going way too fast for me here. All right, loan approval, question mark. I'm just writing this down. I'm not going to get to all of these. Full disclosure, I will not get to all of these. Van orders for Q2 and production. Yeah, and I got all that. These are all, you guys are asking the same questions. Okay, that's not a bad note from Yosef, actually. It's not really a question, Yosef. If you turn that into a question, I could potentially ask it. Insider activity is always a good question to ask. Insider activity. In this case, the lack of insider buying is certainly. You want me to? I can ask about meatballs. Do we think David has an opinion on meatballs? We can certainly ask about that. Yeah, JD, that's sort of the $1 million question, right? Is the battery tech. There is an update, was it Tuesday, about the batteries? But JD is asking the $1 million question about the battery tech and how it differs from the other companies out there. So that's a great question. I'm writing that down. Oh man. Plans on selling the battery to other car manufacturers. That's an interesting question. From Levi. Is it Levy or Levi? I'm writing these down. Electric meatballs. I can do it, I suppose. I don't know if I'll have a good answer. What else? Earnings release date. Okay, that's not a question I would have normally asked, but sure. I don't know if they've scheduled it yet or they've announced it yet. A lot of companies, I'm not going to announce that because I'm not going to ask that because we're in between earnings season here. So a lot of companies haven't announced their upcoming earnings date. So whatever. If we have time for it, I'll ask. But I wouldn't expect Mullen to have that when, frankly, most companies don't have their upcoming earnings date announced anyway. So what car does David drive? Oh man, that's funny. I'm not gonna ask that. Yeah, I'm getting okay. I've got a lot of questions and tweets about the t-shirts, guys. I'm sorry, I don't care about your t-shirts. Okay, I don't. That's not what. Sorry, I like bigger fish to fry than your t-shirts. Although, if you want a Benzinga t-shirt like the one I'm wearing, you can go to swag.benzinga.com. Hey, all right. What else? What else? I typically would ask David or anyone in his position about just cash on hand and just the usual balance sheet question. Are you comfortable with that? I know there's been some dilution recently. Do we think they're done? I don't know. Yeah, per perb, I'm going to ask about the Fortune 500. I will. That'll be like among the first questions that I ask. That's all you guys want to know. And actually, I'm pretty sure last time he was on, what was it, like March? I want to say it was March. He said they have the Fortune 500 order, but then he didn't. I asked him to elaborate, and then he didn't say more. He was very coy. So I think that was in March. Could have been April. Time is a construct. But yeah, I hope by now that they have an update for us on who that company is. Do we have any guesses in the chat as to who the Fortune 500 company is that they said they had to deal with? Oh, that's not a bad question from Sarah Flood about their hiring. It's an interesting question. I'm going to ask about insider activity, okay? Insider transactions. So you can stop asking me about that now. Netflix, Amazon, the pizza company, UPS, Delta, Stellantis. Interesting guess. IBM, Tesla, fake company. Okay. McKesson. Huh? That's an interesting guess. Seeing a lot of FedEx and UPS and Amazon. JB Hunt, there's a good one. Apple, yeah, no. Honda or Hyundai? Honda would be interesting, especially because of what Honda just said yesterday or Wednesday, right? That their U.S. sales were down 50% year over year in April. Ouch. Yeah, I appreciate the feedback. Again, like I'm not trying. I really am not trying to move the stock in any way. If it goes up, okay. If it goes down, okay. Like that's the way. I don't control the market. I really wish I had the influence that people sometimes think that I or Benzinga has, right? The market is a gathering of thousands of forces acting upon each other at the same exact time. Is David liable to move the stock with what he says? Yes, he knows that, of course, but only he really has that power. It's certainly not me, certainly not Benzinga. So I hope you all know that going in. And look, whatever happens, and that's the way it is. And if you have any complaints, I will direct them to an email that after today I will no longer receive. But if you do have any complaints for us, why don't you email us here, shows@benzinga.com. You're welcome to the rest of my team. It's about to get 100 emails. I'm not going to be getting those emails. All right. You guys are just repeating the same questions. So unfortunately I have notes prepared already, so I don't need to rely on these. But wait, actually, there was one I just saw just now that kind of caught my attention. Any specific institutional investor that has David excited? Here, let's do this real fast. And I know it's probably difficult to see. I know it's difficult to see, but I'm going to bring up the chart here, and I'll make it easier for you all to see. I know it's hard to see that. Give me a second. Let me just make it easier to see here. We'll go white lines. Oh, God damn it. We'll go white. We'll go white. We'll make our scale text way bigger here. Session breaks, sure. Hold on. It's been a minute since I've had to do this. No. Scale lines. All right. There we go. All right. That should be easier to see now, right? All right. So I think that spike was the last time David was on with us, March 21st, if memory serves correctly. So here we go. I'm not a technician. I don't really have a lot to say, frankly, about the chart, other than it's kind of done nothing, right? For the last 4 months, you can see. I mean, I guess since we stopped going down there in middle February, there, we had that rally and sort of giving it all back, but over the last month or so, it's been pretty quiet. Very interesting. The volume spikes on this are very interesting to me. Just and I know they're not. I'm aware that they're not random, right? These volume spikes occur when they announce news. So very interesting. Maybe we should go back to no, November. That was the actual IP. That was the reverse merger date, right? So okay, we're just gonna leave it as is. Oh, Mage Pie. I like that question. That's a really good question, Mage Pie. Is it Mage Pie? Did I get that right? Ooh, it's a bit of a deep question from Mage Pie. Okay. Again, I'm not gonna have time for all of these, so I apologize. But all right, let's take the chart off the screen. I think we're done with that. David, I see you backstage. Can I get a thumbs up from you if you're ready? Oh, there it is. I see the thumbs up. All right. On that note, I want to play a quick commercial and take a quick break. And no, I'm just kidding. I'm just messing with you guys. I know why you're here. David, they're not here for me. I can tell you that. They're here for you. Let's bring on the CEO of Mullen Automotive, David Michery. David, there he is. Good morning. Good morning. And I know it's early for you, so thank you so much for joining us at like 8 in the morning.
Absolutely.
Okay, David, I just spent the last few minutes listening to questions from the chat, and we have a lot of them, and we're not going to get to all of them, so let's just move quick. The first thing I want to start off with, the news from, what was it, Tuesday or Wednesday of this week, a couple of days ago now, the update about the battery technology. Explain that and what that means.
Okay, I'm going to try not to rehash the same old story, but we got very favorable test results. We wanted to retest our battery. We hired one of the most reputable groups in the United States. They tested our solid-state polymer battery, and it exceeded our rated amperage and voltage as stated previously in previous reports and releases. And it's a good feeling to know that our battery has exceeded any expectation that we've had for that cell. So we're very excited.
So what does this mean going forward, though, for the actual technology here?
Well, it means we can start to scale it, and that's exactly what we're doing. We announced not too long ago that we're going to take it to the vehicle pack level, and we're doing that.
All right, David, one of the most frequently asked questions in the chat this morning, in my DMs last night, somebody even may have emailed me saying, ask about Fortune 500. Now, when you were on with me, I think it was actually March. It may have been about 2 months ago, 2.5 months ago. You did say you had that order from a Fortune 500 company. What else can you say? Because when I asked you to elaborate, you were very coy about it. But what else can you say about that order? Can you say who it's from? Can you say how big it is? Can you say when it's for?
Well, as I stated in our previous conversation, it's a pilot program. And I can say that we initiated that program, meaning we made the delivery on May 12th.
Oh.
And the customer has put the van into its pilot program. And the customer has reported to us that they are pleased with the performance to date, and we expect to share details of the pilot program with our investors in the coming weeks. So we're pretty excited about it. So everything's moving along exactly as planned.
I didn't expect that answer. I'll be honest with you. But we are going to find out one of these days or one of these weeks who this company, this mystery company is, and what the nature of their order is.
Absolutely. We're actually working on the PR with them as we speak.
All right. Then I guess it's still wait and see mode. Let me ask you about that announcement. Will that announcement have details about the size of their order and the orders versus delivery timeline?
Everything will be in that PR. We're pretty excited about it. We've been working on this for over a year. Okay, this is not something that just transpired overnight. This has been a very long time in the making. We want to do this right, and we have their cooperation, and they're very excited. Again, we started. I can officially tell you that we started the pilot program on May 12th.
So you delivered the first. Can you say, how many cars did you deliver? How many vehicles did you deliver?
I can tell you that we started the pilot program on May 12th. And so far, the results back from them are very good.
Okay. Are we talking like end of the month here, or at some like in June is when we're going to get this PR? Or are we talking like next week, or like what's the timeline here?
We made a statement that we would announce this by the end or within the completion of the second quarter, and we fully intend on doing that.
All right. Second quarter is coming to a close here soon. So, all right, we'll have to look forward.
That's absolutely right.
Yeah, I too can read a calendar, David. All right. So, okay, I think that's kind of the elephant in the room here. So I guess we're just gonna have to wait and see about that. What about? Are there any other orders you can talk about, like for the van for Q2? We had a lot of questions about that.
I can. I do want to add one thing that I think is very important. A couple of very substantive things that have happened recently because of our amazing test results on the battery. Earlier this week, we've started negotiations with a couple of major OEMs regarding our battery technology, and we've commenced preliminary discussions with these parties. So that I thought, was a good piece of information that we could share.
I appreciate that. What about the status of this ATVM loan? I believe you had applied for it end of April.
Yeah, April 29th to be exact.
Right. Has that been approved? What is the status of that?
No,
Is there
it's a process. I don't expect to hear back from them until August is when I expect to hear something.
Okay. I take it that you expect to be approved for the loan.
Well, again, look, I don't have a crystal ball. There's a lot of factors.
Yeah.
Again, there's a process that you got to go through. You try to have, you submit your application. You hope that you can get to what they call substantially complete. And then from substantially complete, you go to a conditional commitment. And usually that can take anywhere from 12 to 18 months. And that's just that's the process. I mean,
Right.
it's the process.
Okay, and I'm gonna go back and forth between kind of my own notes and the chat here, because the chat is on fire right now. Going back to the battery for a second, this is an interesting question we had earlier from the chat. What conversations have been had, or is it at all possible for Mullen to sell your battery technology to other manufacturers down the line?
I thought I just a couple of minutes ago stated that because of our impressive test results, we are now in discussions with a couple of major OEMs.
Okay, you're right. You did.
Yeah,
you did say that.
We've started preliminary discussions with these
My bad.
parties. Stay tuned; it's going to be pretty
You
good.
did say that. You did say that. Wow, I just had a major brain fart there.
That's okay.
I'm not even going to look at the chat. The chat's going to eviscerate me for that. So I'm not even going to look at the chat right now.
I'm tired. Myself. I've been working timelessly over the last 24 hours on a significant transaction. However, we don't comment on rumors or speculation at this point. I can tell you that something very impressive is coming down the pipe. Now, we can't guarantee that a transaction will occur, but a lot of good things are happening here, all at the same time. So we've been very, very active, and I'm very tired.
Hey, man, it's the story of my life.
Putting in 20-hour days.
I do want to ask you, David, just about the insider activity here in the company. Obviously, you can't speak to other people; you can only really speak to yourself. But when I look at the insider transactions from Mullen, I don't see a lot of buying. I do see some selling from you recently. Can you just speak a little bit to the thought process there?
Just decided to sell some stock, nothing more and nothing less.
Are there plans to sell more? Is that part of
every officer or director has an opportunity to sell based on the 1% rule per quarter. And, if they choose to do it, they do. If they don't, they don't. And, I chose, periodically to be able to take advantage of what I'm allowed to do under, SEC rules.
Was that part of a pre-planned sale, a 5B1?
No.
Okay. All right. I just wanted to address that because there was a lot of questions from the chat. Also, just looking at recent activity in, with the company and the stock, and you did just, do some dilution and raise some money that way. Are you comfortable with the balance sheet as it sits right now, the cash position, the ability? Because obviously you're going to need to reinvest a lot of cash here. Are you comfortable there?
Well, I'm comfortable that we have enough cash to get us through 2022, as stated previously. Our plan does call for a $1.3 billion spend, which is half as much as most of these guys will spend to get to a start of production. We believe that our plan is the most efficient. We have the advantage of having a facility already. And if we obviously, the way that most companies in our position today raise capital, obviously, is through the sale of their security. And that's the reason for being public. Will we raise additional capital? We have to, just like everybody else has to. I mean, Tesla has to, and then they're a $800 billion market cap company. So, of course, but as time goes on, and as your stock strengthens, you can make better deals. Each deal will be better than the next deal, but it's a part of being able to execute on your plan. One of the concerns that a lot of the investors had in the past, and looking at our balance sheet, well, how are they going to fund, this plan? Well, obviously now there's a solution for us as we get more activity, as the company delivers product, as the company expands its operations. So will the ability to raise additional capital at more favorable rates and execute on its plan. Ultimately, our plan is the most efficient plan out there.
How do you explain to, the outsider here, like how your ability to spend at such a reduced rate compared to the QuantumScapes and the other EV manufacturers of the world, like how really is that possible for you just to spend a fraction of what everyone else is spending?
Well, it's been like that for us from the inception of this company, meaning you can only spend what you have. So you try to be, frugal. We pride ourselves in being fiscally responsible. We don't overspend. Everyone here does multiple tasks. We have top-rated people that that come from startup backgrounds, like John Taylor, who's one of the guys that one of the first 50 guys that came over from Detroit with Elon Musk to Fremont and built the entire architecture for Fremont, as well as the architecture for the Model S. And these guys had to be efficient. They had a small little crew, and look at what they were able to accomplish. So one of the things you learn is you learn to be fiscally responsible. You don't waste money, and you stretch every dollar, not a mile, you stretch it 100 miles. You try to maximize as much efficiency as you can possibly. Also, that includes how you approach your build and your spend. So from our perspective, it doesn't matter if we had $100 billion or if we had $100 million, we're going to take the same attitude and we're going to be fiscally responsible.
I like what you said before. You can only spend what you have, which is true. Okay, so I'm going back to my list here. I have so many. My notes are all over the place, man. So I apologize for sort of jumping around here. There was a few questions in the chat still that I wanted to get to. One of them I thought was very interesting. I did not plan to ask you this. Is not a question I really would have thought to ask you, but I thought it was more of a meta question. And the question was, how do you view your investors? In other words, like, what does it mean to you for someone else to invest in Mullen and to own Mullen stock?
Well, there's no mystery that we're highly held by the retail community out there. I think we're in the top 4 of retail held stocks out there. So their opinion matters. I periodically look to see what these retail investors look at, what they want to see, and we try to address as much as we can within the confinements of the law. Again, there's insider rules, there's information rules, there's things that obviously, as a CEO of a publicly traded company, you have to be careful. And in instances where maybe something was not portrayed correctly by a third party and you would love to jump in there and address it, sometimes you can't because you don't want to subject yourself to any potential SEC violations. So you got to learn to, some people find it very difficult to do, but you got to sometimes button that mouth. So, and you don't want to, create a situation for you and your shareholders. The idea here is to build value for our shareholders, to get out there and spend efficiently, execute on the plan, deliver when you say you're going to deliver, and hope that the market rewards you by showing value and the appreciation of your market cap and your volume and your stock price. And these are the things of being a public company that you have to shoot for.
Yeah, that's sort of like the line that every CEO sort of has to walk, right? Is I feel like wanting to engage, but also not say things that you can't say. I want to ask you just overall about the macro environment here. We just had a headline, really the dominant headline of the day, really, for the overall markets and the business world is, Elon Musk has said that he wants to cut about 10% of Tesla's workforce. Obviously, there are concerns about global supply chain still, and money is getting more expensive to borrow. And there are several macro headwinds that everyone is facing, and that's not unique to, and that affects you as well. So does the changing macro environment, the continued disruption of supply chains, whether it's rates going higher, money getting more expensive, how does that impact you? Does that concern you at all?
Can't impact us more than it already has. I mean, okay. We operate on a fine line. Again, we always think out of the box, and we always think about what if. So we're always addressing supply chain issues. We're looking at ways to, ensure that we're not going to have any stoppages. As far as employees, we're not really worried about that. We're a small company. We probably have, I don't know, less than a couple hundred people working for us, but they do the job of 1,000. I mean, we got people, as I stated earlier, that do multiple tasks. No one gets employed here unless they're willing to work as hard as I work.
Thank you for that response, by the way, because I think certainly a lot of CEOs have come out in the last few weeks and sort of tried to point the finger at the broader economy, and blame that for their problems. And maybe they're right, maybe they're not. But I appreciate you sort of addressing that, because it's an easy excuse for every CEO. Oh, it's supply chain, it's rates are going, it's the economy, right? But that applies to everyone pretty equally here. So going back to the chat there, this was a good question from the who just asked this question. It was about the battery. And does the battery update from a few days ago, does that translate to greater mileage or a faster charging time? I can't find the question now, so I apologize, but it was from Chris.
Yeah, it translates to both, meaning the amount of cells that we would put into a pack to get to 150 kilowatt hour equivalent, and the amount of time to charge or discharge, that cell. So it's, for us, it's about efficiency, right? In every corner, we're trying to reduce the cost and trying to increase the efficiency. So if we can accomplish that, then I think that we're on our way to a very successful battery undertaking.
What about other applications for the battery tech outside of vehicles? Talking about phones.
Sure. I mean, look, a cell can scale up or down.
Right.
We're going to scale up to the vehicle pack level. Sure. If look, we plan on sharing our technology with everybody, right? Cell phones are not out of the question. Power tools. I mean, anybody that needs a really good, reliable, and safe cell, we're your man.
All right. I guess we'll have to wait and see for more announcements about that, which I think would keep people on their toes for sure. One thing I wanted to address, and I meant to get to it by now, but I didn't, which is the Hindenburg short report from a couple of months ago now. I'm sure you saw that. Do you have a response to the claims made in that report? And just what do you say? Not so much to Hindenburg per se, but to any short or any bear really out there.
Results will speak for themselves. We will continue with our plan, and the results that we publish, I believe, should address anyone's concerns.
To your eyes, did you see any inaccuracies in that report?
I really don't comment on stuff that really is not relevant to me. I mean, if I did that, I'd spend the rest of my life answering, every person's question that either really isn't intelligent enough to understand what we're doing or is malicious in intent. So from my perspective, I focus, on the plan. We have a very cohesive plan. We're going to get out there. We're going to execute. And when we execute, we're going to put out information as we are required to. And that information will either corroborate what we're doing or not. But
why do you suspect that your company has people so riled up? Really, on the bullish side and on the bearish side too. You have people very riled up. Why do you think that is?
MULN's a disruptive company. MULN has, from the inception of the company, has always been different. You got to remember, we just didn't, wake up, a year ago and decided we were going to take a crayon and a piece of paper and draw a car and go get a SPAC and become public. We took the hard way out, right? And we wanted to be different, and we developed our brand. We have expertise in being able to service a vehicle, to sell a vehicle. We know what it takes to handle recalls. People forget that we had a fully homologated a DOT certified vehicle, the Coda sedan that we took over. And we had that car in circulation and sold cars and did all the things required. We still offer support and service for over 1,000 cars that are on the road. So again, like I said, hey, it comes down to, You let the talkers talk, and you let the doers do. And at the end of the day, we'll see who's at the finish line.
Couldn't have said it better myself. Just as we wrap it up here, David, we talked earlier about the upcoming announcement for the Fortune 500 company. You said end of Q2 for that. What other details can you give us about timelines for announcements, whether they're announcements related to the Monrovia facility, the announcements related to the 500 company? We already talked about that, but other upcoming announcements. Can you give us timelines on that?
Plenty. Again, we'll share that information in the public forum, and we plan on having many releases. And we're excited because we're very active. We're engaging with everybody. And recently, again, as I've stated earlier, a couple of pretty big OEMs are very impressed with our battery results. So much so, I'm talking at the CEO level at some of these OEMs that want to sit down and talk about doing deals. So we're open to it. Listen, as I stated earlier, we're willing to share the technology. I want to be like Bluetooth, license it to everybody.
I would presume that the sales cycles at these OEMs is like a years long thing. Is that, in other words, it will probably be a while.
I wouldn't say that. I wouldn't say that. I would say that in the conversations, again, I've been working feverishly on this, and along with a major transaction that is happening all at the same time. I mean, there's so much stuff going on. When I told you I'm working 20-hour days, I'm working 20-hour days. So a lot of good stuff happening, more so than ever in the history of this company. And I think you're looking at a what's the term? I like sports, and I always like to use comparisons to sports. And one of the things that stuck with me was the Washington Nationals, a baseball team that went into the playoffs. Really, nobody knew who they were. I mean, they knew who they were, but no one had any expectations of anything. And these guys systematically went to the World Series and won the World Series and had everybody's head spinning, wondering how the hell did they do this? Well, I like to think we're that guy. Got to remember where we started. We came out, small market cap. People really didn't say much about us, kind of ignored us, and we systematically have progressed forward. And in a short window, we're now larger than some of the guys that had market caps in the $2 and $3 billion, $2 and $3 billion market cap range, and now these guys are down in the $300 and $400 million range. And look at us, right? We're, again, I'm not trying to put anybody down. I'm just telling you, it's not where you start, it's where you finish. And we plan on being at that finish line. We'll see who else can join us there.
All right, David Mishri, the CEO of Mullen Automotive. I'm not even going to give you guys the ticker. It's on the screen, but you all know the ticker, right? So, David, I appreciate you waking up early with us, and have a great rest of your day. Have a great weekend, and good luck.
Thank you.
And I'm looking forward to seeing these announcements soon.
We'll be back again with you. I promise.
Okay. All right. Have a good one.
You too. Thank you.
All right, guys. Did you enjoy that? I certainly hope so. Man, no one ever trained me for how to do an interview when I'm being yelled at in a live YouTube chat. The other thing that I'll add is, I appreciate a good analogy like anyone, but the Nationals suck right now. So yeah, they were good a few years ago, but they're pretty bad these days. So, but I appreciate the spirit of his analogy there. All right. If I disappointed you, tough. Sorry. Can't make everyone happy all the time. We got to move on, though. I'm running a few minutes behind. So let's bring on our next guest. I see him here. Actually, he's lurking backstage. Has been here. Ronnie Cohen. He is the founder and the executive chairman of a company called SQL Technologies. They also go by SKYX Technologies. Let's bring Ronnie on the show right now. Ronnie, how we doing?
Hey, I'm doing well. Thank you. How are you doing?
Doing fantastic. I'm just, being bombarded in our live chat, but that's how it goes sometimes. Tell us about what Sky or SQL. How do you want me to refer to you?
Sky. We call it SKYX Technologies because
okay.
Our company is the sky of the home. So that's the ceiling.
That makes sense. So wait, tell us about what you do.
So, well, we have a 60 patent pending applications. 15 patents are issued, and we opened a new world of safety and smart home on the ceiling. Our first invention was, you have around the world probably billions of lighting installations every year. People go on ladders, risk their lives just to install a light fixture, touch the wires. Going on ladders is probably the most dangerous, number one severe injury in homes. So, the less you spend on them, the better you are. And touching wires and hazardous wires is not fun. So we came with this in the time and the cost that takes an hour to install a light fixture, sometimes more, sometimes less. So professionals, I'm sure, but still it's a risk. So we came with a first invention was a plug and play solution that you can take a light fixture, a ceiling fan, and go on a ladder and just plug it in seconds. And the biggest thing out there is the safety aspects we have. The safety aspect is really major because you don't touch, after a one-time quick installation of a minute or two, you don't touch wires anymore, and you just can go and plug and play. So that was the first invention we came up with. And then, we see where the world is going, and we decided years ago to add some smart features to that, and add some. We have a power, electricity, almost unlimited when it comes to low voltage sensors and features. And we added many smart home gadgets to it, and developed a smart platform, or a few smart platforms that enable you not only to plug and play light fixtures and make them smart, and schedule and control them through your smartphone, also talk to them, and tell, dim it or turn it on, turn it off, etc. But we also created a smart home platform that you can really go to a home and make a home become smart within just literally minutes. So based on the ease of installation, the safety aspect, time saving, and cost saving that we had in lighting, we did the same for the smart home. So literally every consumer, once we launch a product, expected the second half of this year, can go and make his home become smart within minutes. And if you try to make a one bedroom smart today with all the gadgets and all the installations and all the wiring involved, that can take you days. Even in a one bedroom. In a bigger home, it would take you weeks to do a smart home with our device. And on a one bedroom would take you a couple minutes. On a large house, 10 rooms or whatever, you take you a couple hours. And on a large building that has hundreds of units today, if you want to take a rental property and with hundreds of units and convert it to smart, that may take you a year project and many, many millions in costs. And our device really can take a large building, a large hotel, and make it all smart within just a couple of days based on ease of installation. So that's kind of the big, large overview on what we do.
Okay, so I have a lot of follow-ups with that, but before we get to any
Sure.
of that, whenever I talk to a founder, right, the first question that I have is why, right? Like what something must have happened, Ronnie, in your life that, and I know you're a serial entrepreneur, but something must have happened here where you had some experience or something, and you said to yourself, okay, this is a problem, I can fix this. What happened in your life to make you want to do this?
So I thought about myself having good marketing ideas and good ideas, but I never thought I'm an inventor. I was in business many years before my first invention, and I owned lighting businesses and had hundreds of employees. So I knew the lighting industry quite well. And then I sold my businesses and started doing more real estate. And with my knowledge in lighting, and when I started renovating, one time we were involved in a project we bought with hundreds of units of renovation. And I saw the risk and the headache just to install one light fixture. So imagine you have 3 bedrooms, 2 bedrooms, and 10, 20 fixtures in the corridors. So probably per unit is 30, 40 fixtures in average if you take the exterior, interior, corridors, exit signs, emergency lights. And I saw the time, and we wanted to, open the building, and I saw the time consuming, the cost, and the risk of going on the ladder and touching those hazardous wires. And I said to myself, there must be a better solution. This can be huge. And I was excited, but I really, and I had some idea in life, but I never thought I'm an inventor that I can pull it up. And then I said to myself, I didn't find anyone doing it. So I said to myself, you know what, that has such a big market, and that has life-saving aspect, cost-saving aspects, and time-saving aspects. So if you have three winners like this, and I saw the size of the market, and I realized there are billions of installations, and the life-saving, just imagine that 99% of installation go perfect, when that's not the case, unfortunately. But 1% out of billions go wrong, in fires, electrocutions, ladder fallings, etc. So that gave me the drive that this is something that it's like everyone is saying, we're trying to make the world a better place. And I believe many people do. And some companies that just say it as a slogan. But if you have something like this in hand, okay, and you really, saving lives, saving time, and saving money, that was a good reason for me to become an inventor and start SKYX Technologies.
So
Good enough reason.
So it wasn't as if you fell off a ladder yourself and you're like, I'm gonna fix this.
No, but I met many people that did, because I
Okay.
own lighting businesses. That's a
Okay.
great question, by the way. So that really, I knew it. Every time the problem, someone got electrocuted, the fire happened, this guy
Yeah.
fell from a ladder, this guy got injured. And it was in the back of and then when I experienced this on my own, experience in doing it, and I said, there has to be a better solution. I really looked for it. And when I didn't find it, I decided to myself, okay, let's give it a shot and be an inventor for one day. And it worked, and people liked it. So I kept inventing more products, and it really, that's how it happened.
So I admittedly don't really know much about light fixtures, because I don't own my own home, so I've never really had to deal with anything that you just described. But I'm wondering about how much of this is hindered by existing home infrastructure. In other words, is there anything new, wiring wise, that would make the installation of your products difficult, or prevent them in certain situations? Or is it really just as simple as just plug and play?
No, it is really simple. And the beauty about it, many new technologies face something that's called, you cannibalize something else in order to succeed. In our case, we don't cannibalize anything, okay? Because people go on ladders, but people buy light fixtures, people go on ladders, people install them. So that happens billions of times around the world, we believe, and hundreds of millions of times here. And they just do it. So here is a simple way. And as you're showing the picture now, there's an outlet box with wires. So we're not replacing the outlet box. We're not taking someone out of business. The wires stay there. The outlet box stays there. But we are adding our receptacle there that, I think is a nice design too. That's our opinion. But it's not only a cool thing, it's saves time, saves money. Okay. So it's a win-win. Okay. To all across the board. Safety, as I said earlier, time saving, cost saving. So really, no, it actually helps. I think it's a win-win for everyone. DIYs, electricians, and any other, handyman and everything. No one likes to spend time on ladder and touching wires and risking their lives when you have a quick solution.
All right, let's talk a little bit of numbers here. We don't have to get too into the weeds, but what are your sales like? What are your forward-looking projections, and what does your distribution look like right now?
So we sold, and we sold. This is a tough one because our attorneys are on top of me. Anything we say didn't publish yet, but
Hi
there. And we need to get used to to be a public company, and count to 10 before we answer. That's not only for a public company. I recommend for all types of. But we sold 1 million units of our standard device, and we decided with our standard device to do two things. As I said before, to add the smart gadgets, but with the safety aspects, we kind of followed what I called the airbag model. Okay. People invented the airbag, did not chase car manufacturers to include the airbag in the car. They went to the regulators. Why did they go to the regulators? Because they had tremendous life-saving aspects. Exactly, that's what we did with our receptacle. We went to the regulators, we showed them the life-saving aspects, okay? And what they do to the airbag, the minute the airbag proved there's major life-saving aspects, what did the regulators do? Spec'd it on every car in the US. And then what happened globally? They adopted, because you have to change your mindset when it's safety. When it's safety, you have regulators and insurance companies are going to help you to make your success, in addition to all the marketing stuff that you're going to do by yourself. So this is what we decided to do on the standard device. We really went to the regulators. We proved them we have major safety lifing aspects in our product, and we were voted into the National Electrical Code. That's a NEC, that's a national code for electricity, and we were voted into the code with 10 segments in the book based on those safety aspects. So the goal we have is exactly with the standard product to become the next airbag based on life savings for your home. And it happened before. If you recall, the GFCI that you have in your bathrooms, the GFCI you have in your bathroom is a receptacle that has a special emergency switch if something happens in a wet location, okay? 40 plus years ago, that device was mandated to every home in America based on safety aspects. So this is exactly what we're following, the same path, and we did tremendously nice. We're already approved as a code, and we hope that one day that's going to become the global safety and the US, and then the global safety standard, similar to what the airbag happened. Regarding the other, to answer your question more details, so we are about to launch this year the smart products. Some of them you showed on one of the slides. We have and I don't know if we're going to show the video or not, but the video can help explain. But we have really the plug and play aspect, and then we have the smart home gadgets that include. So we believe, based on safety reason, that every light fixture is going to be plug and play rather than risking your life on the ladder. And it's also going to be smart, because that's where the world is going. The world is going to technology. So imagine tonight at 7 p.m. in most of the places in the world, how many times you're going to hear, "Honey, can you turn on the light? Honey, it's dark here. Can you?" And you don't, when you want to change the channel in your TV, you don't go and press the button you used to 35 years ago. And the same concept, we believe that every fixture is going to be controlled by your smart phone as a standard. So the plug and play, time saving, life saving, cost saving, plus the smart features combined, we believe that's the future for light fixture industry. And then we're going to launch this product this year. We can't talk about projections because that's the legal stuff. We're not. Okay,
so as far as the launch goes, though,
sorry about this. What I can say, one number that I can give you, our TAM is 500 billion, over 500 billion. That's our addressable market that we can say that's in the U.S. And we believe that we can take a small bite out of it. This is a nice size of TAM.
I apologize if you already said this, but are we talking like a direct-to-consumer model, or is this going into like Home Depot?
So we are actually going to do direct consumer. We're going to do big box retail. We're going to do online. We're going to do, and we have a licensing model. We partnered with General Electric, and as a licensing model we have, and we're working together. And one of the conditions to become a code product is that you need to open your book to licensing, and that we're welcoming it. We can sell to OEMs, sell to direct to consumers, sell to retail, but also open our books to licensing, because based on safety, we believe that that's going to be a standard. And in order to be a standard, you're forced to share it with everyone, what we're happy to do regardless if we were forced or not. So we do have a licensing model as well.
I do want to bring this slide up here. This sort of gets into the technology that you have in the platform. First thing that jumps out to me here was, frankly, how is all of this possible, really, to have this in the Sky Home? And the second is sort of the question that I sort of can't help myself but ask it as the son of someone that works in information security. Can you just talk about the security of this data and and the security of the device itself?
Yeah, so the security, we practice the highest level of security that exists, the standards in US, plus we have our tech office also in Israel. So we use there, all of the people, tech people are all former Israeli military, highest level technology people. So they know a lot about safety as well. And that's an enhancement to our safety. So we're really the highest level of the protocol that can go with safety are conducted on our products. And then to accommodate all these features, if you think about it, we have one power source, that one transformer and one master board, and all the rest is accommodated. So if you think about, for example, your smart home, look how much software you have on a device based on the electronic real estate available in a smart home. So this probably has 3 to 4 times more electronic real estate, what I call quote unquote electronic real estate, than what you would have in a smart home and smartphone. So we have 4 times more electronic real estate that enables us to include many features. And some of the features you see here, we're going to launch very soon, and some of them are going to follow up in the next generations of the product. But there's a lot of safety features, including smart smoke detectors, emergency lights, speakers, intercom, and Wi-Fi extenders, and many other smart features that we can include. But most important is that, again, we like very much our foundation for every product we have is safety. As we said, and many safety features are going to be included in the smart platform. Not only lifestyle, smart home features, but safety features are very important.
Right, and Ronnie, I know we're still relatively early here, but in the process, but where do you see or foresee most of the revenue coming from in terms of, are we talking residential homes versus office space versus commercial businesses? What do you expect like the breakdown to be there? Like retail, hotel, my house, your house, right?
Yes. So I think the B2C and the B2B at the end of the day are probably going to be 50-50.
Okay.
We expect we have great demand from some builders. There was some press releases of major hotel owners, I think, that joined us. One of them is a major Marriott hotel owner that has many Marriotts around the country. He strongly believes that should be spec'd in hotel rooms. And on the other side, we have a world famous architect, Bernard Ziskovich, that also as a press release joined us. And he believes that that's going to, make buildings and homes become smart as a standard. So if you think about a rental property today that has a couple hundred units, as I said earlier, it would take you a year to convert it to smart. With our device, it can be a couple of days, and you have from a rental building, a smart rental building. So that's, the B2B, but the B2C is you take a platform, you bring it to your house, you plug and play it, you install it, and you have a smart, your room becomes smart. And what I like to, you have your smart home as a personal smart platform. We believe that every room should have a smart home, a smart room platform. So what the iPhone does to your life when you go around the world and you travel, you can't go, or any smart phone you have, it's exactly what we believe will happen in every room. Once you have all those gadgets in the room, is like electricity is a standard in every room. Why not smart homes as a standard? We've been to the moon 1969, so that means technology is all around the place for so many years, and no one figured out to make smart homes as a standard. We think that based on the ease of installation and the all-in-one concept, you can make a room or a home become smart within minutes. And I think it's a game changer. We all strongly believe that, B2B and B2C are going to be big factors in our upcoming launch.
One of my favorite fun facts is that we put a man on the moon before we put wheels on luggage, but that's the way it goes sometimes. Ronnie Cohen is the founder and the executive chairman of SKYX Technologies. The ticker is scrolling across the bottom of the screen there, SKYX. Ronnie, a pleasure to talk with you. Thank you so much for joining us today on Benzinga's All Access.
Great. Thank you for having me. See you
Alrighty.
next time.
See you
Thank
next time. All right, we have come to the final segment of today's show. Actually, the final segment of my final All Access show, and we are gonna pivot here away from the C-suite, away from CEOs, away from public companies. This will be actually a good segue into our next show, which is Benzinga Live, which is much more markets focused. I have not been looking at the markets for the last 2 hours. Okay. So I have no idea what is happening out there. So maybe I should bring this next guest on to just help me bring me back in here, bring me back into the markets. What did I miss today? Todd Soleimani is the Senior Vice President of Research at Schaeffer's Investment Research. And he's going to try to bring me back, bring all of us back here into the markets because I haven't been able to really keep track of things these last 2 hours. So Todd, good morning. How are we doing? First off, tell me I didn't butcher your name too badly.
Salamoni is how you pronounce it.
Damn. Oh, well, can't win them all. All right, Todd, you are the Senior VP of Research at Schaeffer's Investment Research, as I just said. Give us your quick take on the state of the markets right now.
Okay, well, obviously, unless you're on a different planet, you probably realize that the market has sold off heavily in 2022, and it all began really back in late November when the Fed pivoted, and this whole concept of easy money potentially going away scared some people, and then we have what we have now. We have the Fed in liftoff mode. What I've noticed is, as we came into the year, there was this projection of, how many times or how many times they might raise. And it is steadily going higher. So I think the market, I think the market is okay with raising rates. I'm not sure it's really comfortable with at what point they will quit raising rates. And I think that's what this market's trying to sort out now. It's that, what is that neutral? We know there's inflation out there. We realize the Fed has to do something. And I think there probably has been some points where the market participants might be saying, hey, wait a minute. As we project out and as the Fed talks more, this might be going overboard. And so then we got the recession worries. But then again, if they don't do enough, we've got inflation worries. So where is that perfect where is that perfect landing point? And I think that's what market participants want. And until we get clarity on that, I think we're going to see this volatility that we've been seeing.
I believe you, and I agree with you wholeheartedly. And the reason I do agree with that take is you can see it, right? Because every time anyone on the FOMC committee, any Fed president, every time they come out and they give any inkling of how far the Fed should go, how much more they can raise rates, or when they're going to be done. Is this like a 2-quarter process? Is it a 4-quarter process? Is it a 1-quarter process? Anytime we get any whiff of a hint of a detail, the market just, whipsaws, right? Because that's what everybody wants to know. If we can pinpoint one point of anxiety for the stock market today, I agree with you. It is probably, okay, Federal Reserve, when are you going to be done? Right. And no one knows.
Yes, and it is interesting. And if anybody that follows my market commentary, which I write weekly, it's Schaeffer's Monday Morning Outlook, and it can be found at schaeffersresearch.com, knows that in a way, the whole buying process from the COVID lows in early 20 was orderly. And what I mean by orderly is if you're a technician like myself, all it takes is connecting higher highs and lower lows. Or I'm sorry, it was higher highs and higher lows. And from, ever since we went into that easy fiscal, easy monetary policy, the market was on a very sustained uptrend following that channel. Yes, there were a couple times where we moved outside of that channel, and there were some key moving averages that came into play. And sometimes that was around expiration week when things can get exasperated. But again, going back to what I said before, when the Fed began pivoting in November, that's when we began moving outside that channel. And now we've been in this channel that began in January that it's a downward channel now. And we've had these lower highs, lower lows, and we're moving within that. And I just find it interesting that when the Fed pivoted, that's when the up channel was broken. And ever since we've been in this raising rates, and there may be more, and we don't know how much more, we're in this down channel. So it is orderly, even though it sounds like market mayhem. There has been some order to it.
I actually want to ask you about your post, not from this past week, but from a couple of weeks ago.
Okay.
And the headline on it was S&P 500 nears trend line with historic buying opportunity.
Yes.
Oh, yeah. And those words perked my ears up a little bit. So, and I want to bring up a chart now just to give you an idea. Todd was talking about this. This was out on May 14th. So Todd is literally talking about this area right here. What made you say that?
Yes, and actually the chart, and I don't know if that's the correct one necessarily, but the historic. One thing we do at Schaeffer's is we look at moving averages. Now, as contrarians, one concern we have with that is most technicians do look at moving averages.
Yep.
So what we tend to look at are what moving averages have mattered historically. And our eyes perk up even more if it's something that we see outside the realm of most people. In this case, it's the 24-month and 36-month moving averages. And if you look at a monthly chart, 24-month, if you think about it, is kind of an orderly moving average. It represents 2 years of monthly closes.
Yeah, I'll pull up a monthly. This is a monthly SPY for you.
Yes. So if there's that 24-month moving average, you will see over the years, not only this century, but go back to the 70s, 80s, 90s, there have been pullbacks contained at that 2-year moving average. Now, does that mean they're always buying opportunities? Absolutely not. In fact, when that breaks, and it breaks, we key on the monthly close. There will be intra-month breaks. We key on the monthly close. When there's breaks of that, sometimes you'll see that 3-year moving average mark the bottom. So, the one thing I've said in my commentaries, and you can probably attest to it, is I'm not necessarily saying we're at a bottom, or I'm not necessarily saying we're in a bear market. I'm just telling investors, look, since we don't know, we don't have, unfortunately, not all of us have that crystal ball. What are some guideposts you can use? So, back in March and April, my point was, man, I'm seeing some things that are changing. The market's not doing things it has been doing. It's not respecting that channel. But then I looked and I'm like, man, the risk though at the time was a move down to this 24-month moving average. So now what do people do? We were like 10 or 12% above it at the time.
Yeah.
And so, I was just saying, maybe you want to hedge here, because if it does break a level at this point, that 43.75 was a level I was focusing on, we could get a major breakdown to that level. But now it's more like, okay, on a monthly closing basis in May, we held above that. So maybe you want to trickle back in the market. I'm not saying full bore go back in, because there are some technical levels overhead that I discuss in these commentaries that I'd like to see the S&P to take out to more or less confirm that these long-term moving averages could be a trough. We're not there yet. I mean, the market, the S&P, in fact, closed above a key level yesterday, but here we are lower already again today. That was the June 21 low and the March 21 low. It ducked its head above that yesterday, and that was good, but we need to see a sustainable move above that level, and that's just one of several that I'm keying on move overhead. And as they take these levels out, then you can put a little more money and a little more money back in. But again, I'm not here to say whether a trough's in place or we're in a sustained bear market. I'm just saying let the market guide you based on where it's trading.
And this is the NASDAQ. It's a little bit different, but this is the NASDAQ, and this is kind of the point you're making, though, because the NASDAQ is more sensitive right now anyway. And the
Yes.
green and
Yes.
the green line is that
36-month moving average.
Okay, and the red is
the red line is the 24-month moving average. So as you can see on that, sometimes that 24-month moving average has been a great buying opportunity. But when it breaks, as it did, notice how that 36-month moving average marked last month's trough. Now, is this just a bounce? Are there some other things I'd like to see? Absolutely. I'd like to see that 24-month moving average retaken. I'd like to see the March lows taken out on the NASDAQ 100. I think that's 13,050. We still haven't done that. So is this a bounce, or is this a major trough? I'm not ready to say anything about that because I need to see the NASDAQ do a little more than it has. I think it's encouraging that 36-month moving average held, but now I need to see some more confirmation.
And this is the S&P version of that same chart. So you're gonna make
yes, there you go.
Before it. So I just am curious, actually, Todd, what your take is on the month of May specifically. You basically ended up right back where you started.
Right, yes,
After all the hullabaloo and all the fussing, we ended up right. I mean, the Russell 2000 ended up, what was it, down 0.003%, which might as well be nothing, right?
It may as well be nothing. Yeah, and it was interesting in the final days of that month, the last couple of days, you could see the S&P just kind of acting like as a magnet to where it to the last month's close.
Yeah. So what do you make, like, and I think they call that a doji, but what do you make of that kind of price action? Does it, and I know you just said, you like measuring things against the moving averages, whether we hold or not, but right. But like in terms of just the overall price action and the fact that we settled where we started, I guess, we are still technically in a downtrend on a monthly basis, especially if I go back to that NASDAQ chart, that's a little bit more pronounced there. What do you make of this fact, though?
Well, I think it's encouraging if you're a bull that we were able to after all that downside we saw in May rally back. And again, I think it's just this. They're trying. You do have some people looking to buy the dip, and I think it's just all investors just trying to digest a confluence of events, whether it's the Fed, whether it's Russia, Ukraine. I think there's some longer term investors that may have come in and looked at this as a huge opportunity. And that brings me to another point. It's interesting because, as I said in last week's commentary, we really look at sentiment. And, if I look at what option buyers are doing, which are they're short-term oriented. In fact, a lot of option buyers, they're buying 3-week options. They're as negative as they've been. And as a contrarian, especially when you see these long-term levels hold, that's encouraging because when those short-term speculators have an extreme bias as they do now, and looking back over the years, they're extremely negative. That sets the market up for some short-term explosive rallies, as we've seen the past couple of weeks. But at the same time, longer term, you got short interest on the S&P and on these NASDAQ 100 components at multi-year lows. So I think there's I think there's this battle going on between short-term and long-term, and I can't answer this question, but I think one risk to the long-term case here is that these longer-term, those are the longer-term view. Now that the market has taken a hit and the Fed put, if you will, is no longer in play, will these shorts begin coming back in and building positions? And if they do, that will become a headwind over the next several months or next couple of years. So, you've the market, and that brings me back where you bring the technicals back into play. The market at some point has to make it uncomfortable for the shorts. And I'm afraid, one risk we are having right now is the shorts begin becoming comfortable once again.
I don't know how comfortable last week was for the shorts.
You're right. Yes.
Todd,
again, how do they view this? Or do they view this rally as an opportunity? It's hard to begin shorting the market after it dives 15% in a 2 to 3 week period.
Certainly right. You're a trader, Todd. What do you trade, and how have you been approaching this? And what are you buying? What are you selling or spreading?
It's been, it's again, just as I explained before, I let the price action move me in one direction or the other. I've been heavily trading energy calls. The options have been cheap, and there's been strong direction. Even though we're in this horrible market, energy's performed well, and I've bought what are called call options, where you can leverage the upside on an energy stock on pullbacks. Exxon, when it pulled back into the mid 80s, I was recommending call options to our subscriber base. I think that's around 98, 99 right now. So, it hasn't really hit my target yet, and that trade's still open. But those are some things I'm doing. And then technology has been an area of weakness. And, admittedly, I got blown out of some technology puts, but I've also made some money playing technology puts on the downside. So that's the advantage of options. It's leverage. And during these uncertain times, you can use options to reduce your dollars at play. And you can do that because you can leverage the upside. A 20% move might result in a 100 or 200% profit. So why put a lot of dollars at risk when you're talking about those type of profits? So you define your risk by the premium you paid for the option. And, again, on this rally that just occurred, I'd rather be long or in a put option on a tech stock and have this happen, and I can cut my losses, even though I've already defined my risk. I can cut my losses. I can get out of that trade whenever I want. So I'm not taking 100% losses, but I can also have that exposure to what has been the defining action this year, and that's the downside. That said, in this upside move, AMD, we sent advanced micro calls out. It is showing a change of trend right now. In fact, yesterday closed above a trend line connecting lower highs since its peak last year. Would I buy the stock here necessarily? Probably not. It's too much money to commit to a stock that's experienced its downside. Is a call option with reduced dollar outlay perhaps worth a shot? Absolutely.
Interesting. I happen to have just day traded this yesterday. I don't do many day trades, but I happen to have caught that wave, stumbled backwards into it. So funny that you brought that up. All right. Todd Salamani, I hope I got that right again, Senior Vice President of Research at Schaeffer's Investment Research. Todd, great conversation that you and I just had. Well, just to wrap it up here, what would be your lasting piece of advice? Let's call it for short to intermediate term traders about right now.
I'd say, obviously you have uncertainty. I would use options if you're not using options already. As I said, it's a great way to reduce your dollar risk. You got the leverage, and I would look to diversify. I'd have my calls, I'd have my puts out there, and just let the market take you. If you maybe diversify your call positions, some stock beating down names that are now showing different patterns that they were when they were declining, but also some of the momentum names like the energy stocks. Diversify on that side, but also have your put exposure out there. Stocks that are now they were in a defined uptrend and now they're showing evidence of breaking down. Take a shot at those, but also have the weaker names. Have some put and call options out there, and not only diversify through puts and calls, but also diversify your setups. I think it's a great way to play this uncertainty, and it's a great way to play what has been a very rotational market over these past several months.
All right, we got Mighty Soldier Trades in the chat. Good to see you, Mighty. Says he, referring to Todd, just put Schaeffer's at the top of my list. Thank you, guys. Thank you, Mighty. Thank you, Todd. And again,
I appreciate the feedback.
Yeah, Schaeffer's Investment Research. He's their Senior Vice President of Research there. Todd, have a great rest of your week. Have a great weekend, and good luck, man. It ain't easy out there.
It's not easy.
Yeah.
But I appreciate it, and you enjoy your weekend, too. It was a pleasure being here.
Have a good one. And with that, we have come to the end of this episode of Benzinga All Access. Always an adventure here. Always an adventure. I have to thank all of the individual people and the companies themselves who came on today's show. Thanks to Todd and Schaeffer. Thanks to Ronnie and Sky. Thanks, of course, to David and Mullen. Thanks to Carl and Mamamancini's Cingulate, their crew at the top of the show. Shane and, oh man, it's been a long morning. Shane and Dr. Childress, I appreciate them as well. Thanks to all of you for hanging out with me here. Hosting the show has been great. I look forward to watching the show next week and every week thereafter with my colleague Michael Murray taking the reins. Now, without further ado, housekeeping. Once again, the show is sponsored by Ticker, TIICKER.com. Let's roll that video.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
All right, this is what you do. You go to the link that's on the screen, you create your account, you connect your account to your brokerage account, and after 30 days, Ticker will send you a nice $20 Amazon gift card for your troubles. I swear, that's true. All right, that's a wrap. I'm actually going to head over to our next show, believe it or not. Can't stop, won't stop here at Benzinga. So I'm going to send you over to Benzinga Live. Aaron Bree should already be rolling on that show, and I'll be stopping by for a few. I mean, it is one of the shows I do here. So I'll see you guys over on Benzinga Live. Only a few more hours left in my time here, so I have to get all the streaming in while I can. Drop me a like with your elbow, with your finger, with your nose, your forehead, your foot. I don't care. Thank you for the likes. Thanks to all of you for watching. And let's roll us out with that video. Producer AT.